All right, let's get a check on the commodities market now. See what's playing out with demand and supply. Dumebi Oluwole joins us, senior analyst at FDC. Great to have you, Dumebi.
Great to see you again.
Yeah, I'm sure you heard the previous interview there. We're trying to find out how the Nigerian consumer is holding on at a time like this. We're seeing food inflation 40%. Who knows where it's going to be, this month? How are you seeing it?
I mean, we've already seen the trend of food inflation, and we don't think it's going to abate anytime soon, unfortunately, simply because a lot of the issues that are currently fueling food inflation in Nigeria are still very structural. And this is one of the reasons why consumer confidence is left unanchored, even when interest rates are high. Because people are still asking the question, okay, if you increase interest rates, how does that affect the price of gari in the market? Prices are significantly skyrocketing.
Heard, some say the interest rate hikes also stoke inflation. We have that part too.
I mean, but that aside, just looking at how it's affecting consumers is one of the reasons why we keep hammering on the fact that there needs to be a significant cohesion in complementary fiscal policy measures that will support what the monetary policy authorities are doing. Reason being that the monetary policy levers to anchor inflation or even reduce inflation are not enough to reduce Nigeria's inflation as of today, simply because these structural issues, they sit within the basket or sit within the table of fiscal policy authorities. Agricultural productivity is low simply because we're having significant increase in post-harvest losses. Logistics costs are high. Insecurity is still a menace affecting food production. And then when you look at the importation of food into the country, there's still lingering, import control measures that are affecting food supply into the country. In the last Article 4 review by the IMF, that was a significant thing that the IMF hampered on, simply because food inflation, food items, they account for about 51% of the total items in Nigeria's inflation basket. And what that simply means is that an increase in food prices will significantly nudge the headline inflation. So if we don't address the issues affecting food production, and all of this that I've mentioned sits within the fiscal authorities. If those issues are not addressed, we will still continue to see this spiraling inflation that Nigeria is experiencing today. The central bank governor did say, don't expect a magic wand, at this time with interest rate hike. But let's look at the global oil market. We see how, energy prices play into, global inflation. But we're seeing some movement now. WTI got above $80 yesterday, but back below that at this time. So we're still seeing volatility. What's driving sentiment in that market now? So it's a couple of things, both demand and supply concerns. On the supply side of things, the expectation is that the markets are expecting that OPEC will maintain its output cuts, and we're seeing I think the meeting is this Sunday. But regardless, that still had a muted impact on prices. We're also seeing the fact that the Middle Eastern tensions as well are still there. That again as well, had a muted impact on prices, at least between yesterday and this morning. But the primary driver are still resident within the demand side of things. And the first thing there is the fact that, number one, U.S. crude inventories, the stockpiles actually increased. And that has an inverse relationship between oil prices. And that's because the expectation would be that demand for gasoline and demand for crude oil will decline from the U.S. U.S. inflation data is also coming out this Friday, and the expectations are that the U.S. Fed will keep interest rates higher for longer. So with that as well, the expectation is that demand for crude oil and also gasoline will decline. Then as well, you look at the demand side issues from China. So even though the IMF recently, revised upwards their growth forecast for China to around 5%. Yes, around 5%. It's still not giving. Still, the macroeconomic conditions in China still point to bearish demand for crude oil. So the expectation is that with time that demand might pick up, maybe between the end of the second quarter of this year. That's by June. But then again, it will start declining again. The IMF is quite pessimistic on China's growth outlook, and that also fed into market sentiment, especially on the demand side of things. But looking looking into the coming weeks, especially after the OPEC Plus meeting that will be taking place on Sunday, markets do expect that oil prices will rebound, but the increase might not be so significant.
Right, and definitely most investors just looking at China.
Yes,
at this point, we're seeing IMF they revise their growth outlook, but they're a big trading partner with Nigeria. How does that impact relations with Nigeria?
I mean, China right now is still keeping up their import and export relations with a lot of African countries. We're not seeing that decline anytime soon, especially as other parts of the West are trying to rebound their own trade ties with a lot of other African countries. The big thing here to watch out for Nigeria and China's relationship is the increase in importation from China, and we don't see that slowing down at least by so much anytime soon. And the reason is because we're not still producing enough, especially for a lot of the commodities that we do import from China. With China's current exchange rate compared to Nigeria's, we'll still see that China is still a better bet for Nigeria to import a lot of commodities into the country. And the reason why that is not going to slow down anytime soon is simply because, again, I said we're not producing enough. Number two, we also need to keep prices in check, right? So encouraging or leaving imports as much as it has been over the past few months, that is likely to continue. So looking at the trade relationship with China and Nigeria, that's import dependency now, for lack of better words, will still linger for a lot of the commodities that we get from them.
Right. Definitely, we'll keep watching out for China at this point, because we know how anything that impacts them impacts the global economy. Thank you so much, Dumebi Oluwole, and Senior Analyst Financial Directors Company. Thank you so much.
Thank you for having me.
All right, we'll take a quick break now. When we come back, we'll get a check on the markets. That's the moment. Just stay with us.
The Dangote Petroleum Refinery is going to be the largest single-train petroleum refinery in the world. Dangote Industries have enormous confidence in the potential of Nigeria. Africa is like an unexplored gold mine. We know there is huge opportunities here.
What makes this project different than others is for sure the size. This project is transformation for the country and for the continent, I would say.
The Dangote fertilizer plant will transform the agricultural sector. We go for the state-of-the-art technology. It will help to create employment and to reduce the massive demand on foreign imports.
It's going to have a major impact on the lives of the Africans. It's a moment of great pride.
All right, let's get a quick check on the market. Now, yesterday's close, another green close right there for the local boss, 98,818 points, breaking that key resistance level at 98,400 and something points. Volume was lower though, 7.27%. Value, 4.76 billion there. That was traded yesterday. Deal 7,781. So we'll see if we'll get another green close today, and maybe a positive week for the local boss. Well, that's it for me on Business Morning. I will give you details of today's close of the stock market later on the news at 10 tonight, and maybe another green close. Thank you for watching. I'm Laddie Williams. I hand things back over to the Sunrise Daily team.